Hey, what's going on? Chris here. And what a crazy FOMC day. Definitely was able to capitalize on it. And as you could see on the week, 38.8%. So definitely was able to capitalize on this week into the year, up 36.73%. Um, I because I had some loss due to chop. I went ahead and incorporated it into the the diagram, so it helps me make a decision of just I guess that's it's more accurate to what's happening. And then you go through this, and then you go through the RSI, and then trend efficiency. It's pretty much a yes no kind of condition, and then you look for the market structure break. But we're gonna spend the time up here. So as far as like government spending, I think they're trying to pass a stimulus bill. We can take a look at was it True, that YouTube channel, True Value Tax guy. Let's take a look. But he always has the updates on the stimulus bill. So let's take a look. Okay. Uh, okay. So it looks like he has a video that was put up recently. So it's about the gasoline stimulus voucher.
In today's video, we're going to review the 4 ways that the federal government is trying to bring down gasoline prices. The 4 solutions that the government is bringing to you and me are: number 1, release more oil from a strategic petroleum reserve, even though we're at a record low level. 2, the suspension of the federal gasoline tax. 3, gasoline stimulus checks. And number 4, gasoline vouchers for Americans. So we're going to go over the 4 in detail. Let me know what you think of our government's 4 ideas. I'm always curious to know your opinion, and I look forward to reading your comments down below. Thank you so much, and let's get started. We're going to start with America's Strategic Petroleum Reserve, the SPR. The SPR is America's stockpile of crude oil. So we store the oil in underground salt caverns at 4 sites, 2 in Texas, 2 in Louisiana. The SPR has a maximum capacity of approximately 720 million barrels of oil. So back in 2009, we were there. We were at maximum capacity. The oil, the oil in the SPR, that's for emergencies. For example, if we're at war or for natural disasters. So we started drawing on that oil from our reserve in 1991 during the Gulf War. We took oil out of there in 2005 for Hurricane Katrina and in 2017 for Hurricane Harvey. Using that oil for natural disasters, that is the most effective utilization of that oil from our reserves. Ed Hers, an economics professor at the University of Houston, said, "The reserves have been used effectively during disasters, such as hurricanes, but it's not intended to be an economic buffer." So Hers is basically saying that high gasoline prices, that is not a good reason to use our emergency oil reserves. So clearly the federal government doesn't feel the same way. The Biden administration ordered the release of 50 million barrels from our reserves on November 23rd. 50 million barrels, that is a lot, but keep in mind that America, we use 20 million barrels of oil a day. According to the US Energy Information Administration, the 50 million barrel release, that decreased the average price of gasoline by 2 cents in the next few days. 2 weeks after November 23rd, the average gasoline price dropped by another 3 cents. So a 50 million barrel release that brought our average gasoline price down by 5 cents. So President Biden recently said that he's going to release another 30 million barrels from our reserves. So currently we have drawn down our reserves to 580 million barrels. This is the lowest level since 2002. So we're at a 20-year low, and we're continuing to release more oil, another 30 million barrels. A big concern is So what is America going to do if we have a real emergency like World War III or a natural disaster? So let me know your thoughts in the comments down below. Moving on to option number 2. The politicians, Republicans and Democrats, they want to suspend the federal gasoline tax for the rest of the year. So when you buy gas, there's so many taxes built into the price of gasoline. There's a federal tax of 18.4 cents per gallon. There are state taxes. There are also locality taxes. So Democratic Senator Maggie Hassan, she is leading the charge. Hassan said, "I continue to call on the Biden administration to take the steps to mitigate the impact of rising prices at the pump through the passage of my bill that would eliminate the federal gasoline tax for 2022. Democratic Senator Mark Kelly, who's a co-sponsor of the bill, said, "Washington must do everything possible to prevent the costs of this conflict from falling on Americans." But many politicians, so a lot of politicians, they are not on board with this bill because they're saying that there's no guarantee that the cost savings is going to get passed on to the consumers. Critics are arguing that this would decrease funding for road projects, and the government, they may have to borrow more money to make up for the lost tax revenue. So the politicians that are against the bill, they're saying if there's a risk that consumers will not experience the savings and it reduces government tax money, then it's not worth it to them. But this option, it's still on the table and it's still being discussed. Option number 3 is the gasoline stimulus checks. This is coming from the Big Oil Windfall Profits Tax Act. The bill was introduced by Democratic Congressman Ro Khanna and Democratic Senator Sheldon Whitehouse. The co-sponsors are Senators Bernie Sanders, Elizabeth Warren, Sherrod Brown, and Michael Bennet. So here's the proposal in a nutshell. You take a look at the average price of oil from 2015 to 2019. So back then, the price of oil, it was much cheaper. And then you take a look at the price of oil right now. Big oil companies, they would pay a 50% tax on the difference. So if the price of oil goes up, then the more taxes that those big oil companies would be paying. The tax collected would be sent to Americans as a stimulus check every 3 months. They want single people making $75,000 a year or under, and married people making a $150,000 a year or under to qualify. The stimulus checks would be $240 to single people and $360 to couples. And this would be for the year, not quarterly. Senator Sheldon Whitehouse said, "The intention is to curb alleged profiteering by oil companies and provide Americans relief at the gas pump." Congressman Ro Khanna said, "The bigger thing is that it's going to save everyone money. If you're big oil and you look at this, you're not going to want to pay this tax and you're going to be willing to lower your prices." However, I do want to mention that this plan, it could backfire greatly by spiking the price of gasoline and big oil companies passing that on to the consumers. So please let me know your thoughts on this bill. Gasoline stimulus checks, good idea or bad idea? And the last one that the government has for you is gasoline vouchers. Our politicians are discussing this idea, and let me simplify for you, what would happen here. So you would receive a voucher. So I don't know if it's going to be a paper voucher, if it's going to be digital, or if it's going to be a combination. So this is all preliminary, but they're talking about $300 a month. So you can claim these vouchers for gasoline when you fill up. So, you could think of it like a gift card too. And if you don't use the vouchers, then you can redeem them for cash. So you can redeem them for cash because if you don't have a car, or if you use public transport, or if you don't drive often, then it would be unfair to you. So you can just trade the vouchers for cash. Stuart Hoffman, a senior economics advisor at PNC, said, "This is a great idea, and vouchers should be provided to all Americans who previously qualified for stimulus checks." However, environmental activists, they're already attacking this plan because they don't want the government to be promoting fossil fuels with gasoline vouchers. So let me know what you think about this plan for gasoline vouchers. In terms of where oil prices are headed, at least in the near future, you have to realize that the price of oil, it was going up before Ukraine and Russia. So oil prices, they were headed up naturally because of the industry underinvesting in new production and increasing oil demands from the relaxing of COVID restrictions, and we're talking about globally, not just specific to America. If the Russia-Ukraine fighting, if that comes to an end, we would see a substantial decrease in oil prices, but prices are expected to remain elevated for the foreseeable future, even if there is a resolution. So if the fighting does not come to an end, oil prices, they're expected to continue rising because of supply side disruptions. So I hope this helps you better understand the options that the politicians have on the table when it comes to lowering gasoline prices. I look forward to reading your comments, your thoughts down below. Thank you so much for joining me today.
All right, so it seems like they're kind of like in a kind of delayed because they don't know how to attack the problem. They got a couple options, but they're kind of finding dead ends, and they're trying to find some kind of stopgap solution, and that's pretty much what it is. And we'll see if it passes the Senate. Like they haven't really passed anything other than funding the government. But I don't, and we already heard from the central bank what they're planning to do. It seemed like they're gonna do like 6 hikes, and they did 50 basis points for I think this week. So black swan events. I'm not sure if the only black swan event I'm aware of is either supply chain constraints from China, and then also the change in world order with the dollar, and then also Russia defaulting on its debt, and Europe owns most of the debt. So something we'll be looking into with Euro US dollar, and just watching it, just looking at the levels and seeing what's significant and how we could profit off of it. As far as like the bond market, we'll look at the yield curve. So we'll look at the yield curve right now. Nothing's really changed really. We got the 7 and 10 inverted. That was when we started to, I guess, sell off into the beginning of this week. 20 and 30 got inverted at the beginning of this windfall on the way down. So, and we got the weekly resistance here. We're currently at it right now. And then we got the left shoulder here. And we got some big resistance here. So going long today, Thursday and Friday, doesn't seem like a bad idea until we get up here and then go short. But anything can happen. We could get rejected, come down, and then go up Friday. So it could be like really wild. My diagram shows, we really got to have the RSI dictate just kind of our bias and also the market structure break. Right now we're at resistance, and we're against. We're under the 200. We just passed through the 24 moving average, and as far as extension, I don't think we're extended. If we did go up into 44.87, we would be extended, and then we would head down. But as far as like the MACD, we're looking pretty solid on all of them. I don't see. Maybe if we break down on this H4 order block, maybe because we did get. If we take a look at the RSI here, on the H4, we're pretty high up there. If we go to the H4 here, we would take a look at the RSI. It looks like we're above 68 that we have right here. So yeah, I think this table is a little delayed, but it does look like we should begin shorting. And I think I'm going to wait for an H1 market structure break until we get under the 24 moving average right here, and then go to the downside. And there's a lot of market imbalances on the way down on the H4, and then we have the one at the lows. But as far as like a lot of pumping power to get us all the way up there to the highs, I say that we test we stop out these bulls here, get the liquidity, and then pump higher. Like this pump that we had, if you thought that was big, if you thought that was big, just wait. If we have a deviation here, we get back under the last week high, and then it might be a confirmation for us to go down. Grab this liquidity to push us up all the way to the other side of the range, probably up here, Maybe I need to grab this level, copy, and then the other level too, and put it in. But those are the only two levels we really need to know, is that range. Whenever we claim to the downside, we short. Whenever we get extended on the upside, we short. And we're going to discuss why that is. But as far as the diagram, yeah, we were going down this path. But let's go ahead and finish this. We looked at the yield curve. It looks inverted. It doesn't look great. Credit spreads, it moved from 1.6 to 2.1. It's getting pretty high. It's new highs on the year, as you can see on the year. And as far as like the 5 years in comparison to the COVID nuke was the credit spreads and the stress was just falling apart. Here we're at least like elevated and concerned for the downside. And then moving on, the MOVE index. I think the MOVE index hasn't really moved, quote unquote. It's kind of barely moving, but right now it's kind of at support, and it's maybe looking to reverse to the downside. We'll see, and it's just going to be one huge like symmetrical triangle. But I think as long as it holds above the 0.13, it's still dangerous, and it could reverse at any time. Right now, we have to see how the week closes before making any further judgments on that. The 10 and 2 year curve is on its way to being inverted. Once we hit that zero line, we've pretty much hit an inversion of the 10 and 2 for canary in the coal mine for recession. So that's something that's like near term at the bond market. There's something to be worried about. We look at the Dixie or the Euro USD. We definitely got, I think, a pump. Oh no, yeah, we got a drop for consolidation in terms of Euro USD. Euro got pumped. Let's see. I'm gonna go Euro. And then go to the monthly. And then we go to the Euro and the daily. So let's clean up a little bit of these gaps objects, because like some of them's like a little excessive. Let's see. Let's see what we got here. If we can clean up something. We want one stuff that says it's like unfilled. There it is. Filled, unfilled. So we want to get rid of the filled. You know, I don't care about the ones that got filled. Okay. I think we're good. Cool. Awesome. So then now this is the weekly order bearish order block. We want to see some kind of test into there. Maybe rejection at the lows here. This weekly. If we could get a rejection, any kind of breakdown that we could sell into, it would be really good for shorting the euro and going long the dollar. And then if we go on a smaller time frame, like we go to the daily, put up the weekly, see what's going on there. I think I put the correct setting here. Yeah, monthly on the weekly. Okay. Definitely looks really good going into that extension. So it looks like we might have an extension this coming week. We'll put this line here. So it lines up perfectly. Any extension in here, if we get into the 72, perfect. Or this market imbalance, looks like we have a daily order bearish order block here, and then the weekly. If we break the daily, then we kind of pause for a little bit. Maybe we'll hit the 200 up at the top. But if we get rejected and this this gap becomes resistance here, that's something we're going to definitely pay attention to for a short. And then maybe all that Russian debt will collapse in the euro, and it will really be seen, and we'll really feel bad for the euro. But that's it's been coiling, and we're ready for a punch into there for a short to the downside. So that's something that we're going to continue to watch. But that's kind of the bond, the dollar side. It looks like more dollar strength is to come. It's just not right now. It looks like the euro wants to power up, and it's going to spike into there. Once it does, we're going to look for some reversals. And during that time, we're also expecting some dollar weakness going into the pump in the S&P 500 on that range we got here on the weekly. If we go back, we have this range that we have on this weekly low here, all the way to the top of the shoulder there, into this market imbalance. We want it to touch on that side. So a lot of money to be made. It's just how it happens. Maybe we come purge the lows here before we come up here, which I think is more likely, especially if, I don't know, who knows. But maybe we hook on, we close above for the day, and then we launch up. But we'll continue finishing this block, and then we'll go into the cycles, and then we'll kind of go into the analysis. But as far as the COT report, we'll take a look at the COT report. So as far as I remember, it's pretty much short the euro, long the dollar against like Japanese yen, Swiss franc, and Canadian dollar, and I think it's pretty much it. Yeah, I'm not looking to play any of the other plays. I just want to play the dollar, something where it's just simple, and that it's related to the market I'm trading, the main security. But looks like it's long the dollar, short Japanese yen, Swiss franc, Canadian dollar, and then short the euro dollar, long the US dollar. So we're kind of, just focusing on the dollar, and the market is like the right move as far as the fundamentals. We kind of made a play of what we would like to see, and then we kind of know the fundamentals of the bond market, and it looks like the move index is elevated, credit spreads are widened, yield curve is inverted in 7-10, 20, and 30. So it doesn't look good. They're cranky, and they're betting against the market right now. And right now it's just up to the dollar and how it moves, and then once the dollar strength picks up, the market will drop. Lastly, the last block is the cycles. We took a look at the cycles. We got the decennial, which is the top one, the annual, which is the 1 year, the 10-year. So decennial annual is like a hybrid between the 10-year and 1 year. And I think it's like the first year of every 10 years. I don't know how it works, but that's what it sounded like. The 10-year and then the 4-year. And it looks like around the 18th we see a peak. So we're going to be selling short. And we're going to try and find a break in market structure. We're going to see look for an overextension under the RSI and see how that goes. But that's pretty much the timing solutions. We got some kind of peak and concave action happening that's confluent and has a consensus among all 4 cycles, math cycles. And then we got some kind of dip around the 28th. And then something around March 18th or April 18th. So we got near the end of the month, we have some kind of concave at 318 near the end of this week. So it looks like if this is the 3rd week of the month, let me see. Yeah, it would be on the last week. So we'll have a breather of 1 week. But looking like those are the actions. 318, concave. 426 through 28, convex. 418, April 18th, concave. That's kind of just what we're picking up as far as like plays to look for in relation to the bond market and government spending and events and what the Fed is doing. But excited to get some short action going on. Just curious as to where it's going to take place on which what extension or which rejection. So we're going to close out of that. We're gonna move. So we've already discussed just kind of the consensus of what this top block is. It's that we're looking for these dates. We got a bearish fundamental. We're looking for just it to line up with the cycles, and we already have some bearish news with the Fed rate hike, and how many times they're going to do it. They already signaled the market, so we're just looking for overextension for some exit liquidity. People who want to unwind their positions and have their traders pump up the price. So we were kind of starting down here, but as far as like the moving averages, we're above the 24. We're under the 200. It looked like the 200 EMA and SMA, and under the 72, and we got some weekly levels as well, and then we got the average daily range. So if we spike somewhere tomorrow, it would give a signal. Let's see, we wanted the daily here. If we spike somewhere tomorrow, it could be to the downside. We could reclaim the 24 moving average to the downside, and then get some liquidity to pump us up to here above the 72. We could get extended and reject off of this high ADR and then drop, and that would be the event that would happen around 318. That's totally possible. We fill this market imbalance, and then we get rejected on the 72 moving average, and then we head down to this market imbalance, and then we grab this liquidity that's down here, and then maybe we just get rejected at the 200 EMA. So it's totally possible. It makes sense that we come up here to get rejected, and then we go down here, and then we have a lower high. We'll see how things go. But as far as like the RSI and just the rest of the model, we're looking for some kind of extension, and then where we're at in the macro range. If we look at, we just pull it up here. Let's open a new one. Put it on the weekly. So we'll expand this weekly, clean, daily. Okay. So we got the fib in place already. We'll get rid of this average daily range because it's kind of just crowding everything. ADR. Okay, that was just weird. I was like, what in the world is that? Let's get rid of these filled boxes. Cool. Alright, so we are currently above the 0.5 fib from the 52-week range, so it's looking good. Any bounce on the 0.5 fib would be really nice. Put this down to the daily so we can get a cleaner look if we retested the 0.5 already. But it looks like that 0.32 is right where that market imbalance is. It looks like we haven't gotten a test of that bottom. Yeah, we haven't tested the bottom here, so that's kind of like the first thing I would like to see, a retest of this bottom before launching up into this 0.32, and then possibly reversing and reclaiming the low. I don't know, but as far as like a reversal point, it would be once we hit this market imbalance, we hit the 0.382. It would be a good rejection point to go to the bottom before launching to lower high at the 0.5 rejection. So we'll see how it plays out. Right now, it's kind of too early to tell, and we're looking for just maybe a deeper pullback on the RSI, and then, or maybe it gets extended. It just keeps going. It just grinds higher through London into Friday, and then short right there. But as far as like daily resistance, it'll be right there, or it would be at the end of this wick right there. So that's something to really keep an eye out for. Let's see, did it show different on the weekly? No. And then we also have this right there. I want to be aware about that. If we reclaim those lows, it'd be a good short. But yeah, it looks like supply for this daily bearish order block, or point of origin. Maybe we come up here, do some kind of stop hunt. Let me see if I can figure out where that. So we want to figure out that level on this pivot. 4507. Okay, so it looks like we could stop out this order block here and then come back, wick back down. So let me see if I can get a box here. So any kind of reclaim to the short side here, we want to short. And then I kind of want to get rid of those gaps, because that kind of distracts us from like the main thing we're focused on. Filled, let's get rid of these filled, and then so we want that back. Looks like we can't get it back. There it is. So then go to object list. We'll start at the top. We don't want to focus on that. And then we got this box. So we're expecting some kind of stop hunt and a reclaim of maybe this resistance here. I don't even know if I need to make a line. It would be nice if I can just draw a regular line. It's good enough. Right there. And then I forgot what some of these. Oh, this is like that order block. Let's go ahead and take that out. So we're expecting some kind of test here on this line, and then a reclaim to this short side here, and then maybe a reclaim of these lows of this weekly resistance. We close the week below this weekly resistance. We come down here. We stop out the bulls. We grab the liquidity, and then I don't know, low or high. I have no idea, but that's kind of just how I would see it playing out. We could I don't know if I could draw arrows that will stay on there, but that's kind of just with the 52-week range of the context. If we were to just kind of incorporate that with the macro range of the 52-week range, and then last week high is pretty much where that weekly resistance is, and then if we could reclaim the last week high, definitely will be equal level for shorting on the week, like an equal level. Let's see. So and that would be fulfill our extension requirement, that it would need to be extended away from the ADR and the moving averages. So if we go to the one that we would get an extension into here, RSI would kind of go crazy. It looks like we need to get the same levels. So if we can copy this. Oh. Okay. Put that over here. So instead of having the shoulder, we're going to get rid of that line. We're just expecting that it's going to maybe hit the bottom of this weekly breaker, and then it's going to reverse. And this is going to be like kind of a reclaim point. And then we got this box. With that wick. So we want a stop hunt and then a reclaim of that box. And then we want a trend line. Cool. It's not even, but it works. But we're expecting it to come into here and then get extended, have a breakdown, a market structure break, short, and then maybe we hit the market imbalance down here. We reclaim the weekly high and the weekly resistance to the short side, and maybe it's happened so quick that it happens before the day closes. I don't know. But I don't know. It would be interesting to see what happens. And then the RSI. So currently, as far as like context, let's see. Let's get this in line here. Yeah, we're overbought on almost all time frames. The only thing that's not overbought is the daily. But it looks like, yeah, we're pretty much overbought. So I expect some kind of pullback, maybe into the 0.5, and then a reclaim of this weekly resistance to the upside to get extended into the 0.382, and then a reclaim of the 0.382 for rejection. So that's kind of just how I see that happening. And then as far as like trend efficiency, we'll look at a trend efficiency. Looks like we're okay to trend on the daily. As far as like on the larger time frames, we shouldn't be like beginning to build some kind of trending, position building kind of move. So so it looks like we need to not go so crazy with our position size, but any kind of dip below the monthly open and the reclaim will definitely be a good starter point for the range extension all the way up here into what's happening up here. I think maybe it's here into the 0.382. Yeah, it's this daily block. Too bad. There we go. So it's shown right there. So we're going to come back down, hit this range, and then maybe get extended, and then come down here. So that's kind of just, and then hit this this trend line here. That would be nice. And then some kind of lower high here in the 0.618 get rejected, or it could be rejected at like at the 0.5. Most likely with this liquidity that's been popped right here, maybe we hit the 0.5 or 0.3. We just hit the 0.32. So if this is a deviation, maybe it's the 0.5. So it would go something like this. Okay. Come down. We break out. Get extended. Reclaim. Uh-oh. Gone too far out. lower high, and then we come down here. Yeah. So it's looking like that's a possibility, and that's a deviation, and then more of a continue short. Lower high, and then retest of these lows, and then maybe we'll see a breakdown. But we want an overextension somewhere, and as far as the noise, how it works is we look for the cloud, if price is in the cloud, and then for the daily, if we know it's in the 52-week range, we want some kind of extension and some kind of disappearing of the extension. So for example, whenever it turns red and then it disappears, we want to start looking for a reversal signal. But when it's quiet like this, we kind of want to trade really small, just because it's not overextended, so any kind of reversal wouldn't have so much like power, and that's kind of why it would chop. So if we were to do a trade, we would do a trade from one end of the cloud to the other end of the cloud. That's kind of just the idea. If we're in the gray, we do a small position size, and then we do one area of the cloud to the other area of the cloud until like I don't know, it finally makes an extension. But since we're in the gray, we want to go as small as possible, and maybe a retest of the 0.5 for a breakout to the upside might be what we need. But who knows? We could have a breaker of H1 or H4, and then we continue to the downside. Who knows? But I'm going to be prepared for that just for Thursday and Friday. And then, but that's kind of how I would handle noise now and chop, because before I just kind of was going by the timing solutions and the cycles and the curves, and now that I see like the grayness of it and just the chop and the range of the chop, it's just a lot easier just to understand. Okay, don't be stupid during this time. This is like full of fake outs. Like that's when the noise is high. So when it gets really tight, the noise is high. So there's lots of fake outs. So don't be stupid. Just do range to range, and that's the main goal. And long trailing stop, small size. Goal is just to make 1% of the day, hitting the other side of the range, or the opposite side of the range. That's just the main goal. If we have a significant market structure break, small size, target long trailing stop, like a 15-minute, 9-period 2.9 or 4 multiple, and target the opposite side of this cloud, moving average channel. This is a 10 on the high and the low. But yeah, that's kind of just that side of the diagram on the trend efficiency. So. And then market structure break. If we look at the breakers, we look like we have an H4 breaker to the low side, and H1 a breaker to the low side. So I'm gonna have those on for a short breaker, and be waiting for that to happen, because it's in line with timing solutions. With the RSI overbought, it makes sense that we would be ready for any kind of change, and we're in line with the timing solutions and then also the fundamentals for a short. So, but the one thing we aren't in line with is an extension on the ADR, average daily range, 9-period. But that's kind of just something that would be nice if we got it. It would be nice, but we'll go small sizing, not be stupid, long trail. 15-minute, 9-period ATR trailing stop, 2.9 multiple or 4 multiple, and then just hit it, break even, and then hit our targets. So that's kind of just what I see. We want to continue to watch the dollar and the S&P 500, and it looks like we're going to have some profitable moves into the end of the week, and then beginning of the last week of the month. So keep your eyes peeled. It's very difficult. Like I mean, I learned something new, which was the noise. Really understanding when there's fake outs and when it's not extended for a good move, and when to have like a wider the normal, I guess, trailing stop or a more patient trailing stop before you move it to break even, playing the range of the chop, which is between the two moving averages and the moving average channel. So thanks for watching. Hopefully you got something out of it. As far as like momentum, just as like put a bow on it. On the momentum side, obviously on the weekly you saw that it looks like on the S&P 500 we could be crossing up to the upside, and then we could be pinching to the upside as far as like a move. So we could expect a strong move, even though we've been seeing strong moves already. Like those 2 daily bullish candles are crazy. And then as far as like this momentum indicator for the daily on the S&P 500, it looks like the trend is still down, and we're looking for shorts for it to pinch to the downside. And then if we go to the H4, it looks like the trend is still continuing up. It's got a little more juice before getting rejected. So I don't know what that looks like. Maybe getting rejected off the 200 EMA, but maybe that's what needs to happen before we pull back, and maybe we have a reaction and fill market imbalance. But it looks like this range is doing really well. And then as far as like maybe the H1, we'll take a look at. Looks like it's consolidating. It's going to consolidate into the Asia session, so I don't think it's going to move. And if anything, I'll be looking for some kind of breakdown of like the 15-minute market structure break, or maybe an H1, and see what happens, and see how far it gets. And then any kind of reversal, maybe get a small entry to the long side to maybe target this 0.618 level or the 200-day EMA, or any the extension on the ADR. But it does look like we want to be looking for shorts, any extension to the upside, and any rejections off of moving averages, or extensions on the average daily range, or like the sell zone and the macro range. And we kind of went through a whole bunch of it, of the sell zone and the macro range, where we're planning for price to be, which is like right here. And then if we got and obviously that's also in the ADR extension. So that's kind of like the optimal sell zone for a high chance of success for a position surviving for a short, and for a long-term short into July. And then we'll go back to the chart. We got to keep in mind the relative strength indicator for just our entries, because we could be getting in too early. We also want to be keeping in mind the noise and the trend efficiency and our position sizing, because the chop could just really take away all that money, all the profit we make. And then we want to be just being patient for market structure breaks, any significant breaks that would help us, which is like the H1 or H4, the weekly, as far as like breaks go. And then as far as like cycles, we're looking for a short in the this coming Thursday, Friday, and then some kind of long into the 23rd, 24th of this month, and then some kind of short in April 18th. And then we got a bearish kind of what's it called, fundamental, and then we got a strong dollar in the COT report, and then a weak euro. So basically a strong Dixie, but and then that would mean a weak market. So that's kind of just the overall picture. Hopefully, maybe this, like, it's not too complicated. If anything, it just works really well, and it's just context. As far as like context, I feel like without the trend efficiency, it's pretty clean, but with this added trend efficiency, it just really helps with just when not go crazy with your position sizing and just really protect the downside and drawdown, and preventing big mistakes that might be in the trading system. But that's pretty much it. Thanks for watching. See you in the next video.